I'm here with Jim Cramer on the floor of the New York Stock Exchange, and what's shaping up to be potentially a milestone couple of days here, Jim. Let's rattle off some numbers. Oil's above 51, Dow above 18,000, back and forth, and the S&P approaching a new high.
And think about this. Think about where we were in January when everyone was saying, listen, as January goes, the rest of the year goes, so many people sold. Think about the low, February 10, 11, where people panicked. And just go back to those days and remember today versus those days. Because what's happened? Okay, so the Federal Reserve basically said, listen, we're going to get out of the lockstep four because it didn't work. And oil did come back because there was a lot of supply disruption. So supply and demand took over again at the bottom. We started getting some commodity relief. We got the banks doing a little better because if the oil companies didn't go under, then their numbers go up. All these things happened, and they're coming to fruition now with the realization that if the Fed isn't going to raise rates and the dollar's not going to go up, and trade is starting to get better overseas, then we really may be setting ourselves up for earnings in the second half to be good. Now, I know that Doug Cass is talking about peak autos, peak this, peak housing. My point is that this is a market now being driven by the transports. And even though I think the rail companies aren't doing that well, their stocks are flying. You watch Union Pacific. The airlines are starting to move. A market that's led by the transports is one that can take out a lot of the highs you just mentioned.